But I mentioned, one of the students mentioned how they like to see certain things in a certain pattern form, whatnot. Well, whenever there's a pool of liquidity that's taken, okay, and it forms with a breaker, as we see here, we have a low, high, and then it runs to take this low out here into a larger pool of liquidity. This point of liquidity below that low here, inside that daily bullish fair value gap, that is where this leg of the breaker, if you look inside this leg, you'll see a fair value gap. Now, this fair value gap here, you want to start looking, going back. Where's the first one you come to? It's this one right here. You got to use the volume imbalance. This specific fair value gap is labeled by my PD arrays as the gauntlet. Okay, it's a gauntlet. It means you're laying down the gauntlet. I'm going to go long on the belief that this low has taken out sufficient liquidity, and then it should go higher to reach into this level here where there would be a breaker. You can use that as a breaker entry. There's lots of times where I use this as a mechanism for turtle soup. What we're going to do is we're going to highlight that right there. Okay, so this is the gauntlet. It's a very specific fair value gap inside of a price run of a bullish breaker. So it's the very lowest first sell side imbalance, buy side inefficiency. It has to be the SIBI. Okay, so when it's bullish, and you reverse this when it's a bearish breaker. It's the price leg that runs to the liquidity. The very first, going from the low back, that's the very first SIBI you come to. This is what you're looking for. When it raids above it and it comes back down in, there's your entry. This is your adding to it. Done this many times, many times. And it's always been coupled with people leaving comments. How did you know? How did you know to use that? Why did you use that fair value? I'm teaching it right now. That is pertinent to how you can engage price action and using the levels here. After it leaves the lower half, see what it does? Trades to it here. The body's staying above it. And then gives you one more time to add to it or enter if you missed it back here. If you did not utilize this, for the folks that say my silver bullet doesn't work anymore, I want you to think about how this drop down in here, isn't that part of the upper quadrant, or the upper half rather? Isn't this right here, this whole mechanism of using a SIBI going into an inversion fair value gap, that's what this is. That's a silver bullet. But I'm highlighting these quadrant levels here, and now I want you to look at this price level right up here. Okay, we're going to show you who knows what, and we're going to also show you what the signature is with the algorithm. If I highlight and hover over top of this very candle right here, which is what I'm doing, I'm screenshotting it when it's me hovering over the 7 minutes after 10 candle on the 1 minute chart. That low comes in at 19,784.25. That's what's being highlighted here. The upper quadrant of this very specific, with the volume imbalance, that upper quadrant comes in at 19,074.25. Boom. That's perfect, folks. An algorithmic price delivery signature, proving to you that the buying and selling pressure did not just agree to stop right there and agree and say that's the lowest this candle's going to go and it's going to go higher from there. It takes more faith to believe than that than it is that the market's rigged and it's controlled and it's going to a very specific level, stopping and turning on a dime, going higher. Why didn't they want to go down below this low? Why didn't it want to go down to the midpoint of it again? Why didn't it just roll over entirely? Because it's scripted. It's also occurring during a very specific time of day. I'm going to go in closer and zoom in on this, but I want to show you here is the buy side imbalance, sell side efficiency. So here is your silver bullet. Forget the gauntlet. Forget that, okay, for now. But there's going to be people putting them in their YouTube videos now. That's good. It's good. It's good. The buy side imbalance, sell side efficiency here, that's your silver bullet. And this is institutional order entry drill right there. And that price running higher tells you that we're moving higher. But this candlestick right here, what I did with Thursday of last week's daily premium wick, we're going to do the same thing right here. We're going to look at this wick here. Let me zoom in. Here's that wick right here. Okay. And we're going to take the levels of the high, the upper quadrant, consequent encroachment, lower quadrant, and the low, which is the close of the candlestick right there. And we're going to project them forward. Okay. Inside this range, from this candlestick's close to this candlestick's run higher, I'm going to take you down into a 15-second chart. Okay, and inside this little range here, this is all you need. When you know you're on side, that means the market's done enough down here during the macro. So at 950 to 1010, that's what this is delineating here. Market drips down into the daily bullish fair value gap. Remember that yellow area on the daily chart I started with? Then it rips higher. We have a shift in market structure here. Silver bullet, institutional order flow entry drill. And then we have this wick in here. We have the gauntlet. We have the turtle suit, low to low. Okay, you shift in market structure. We have this wick's consequent encroachment. Bam. See how all these details are like, converging. It's a confluence of multiple factors suggesting that it's done and it's going to go higher. So let's look inside this little range here on a 15-second chart. This is that 15-second area in here. Okay. And before I go into detail here, I want to show you what I was seeing on the 15-second chart. Because as I mentioned, every time I talk about executions, I'm looking at a 15-second chart, folks. Okay. Just because you don't see it doesn't mean I'm not looking at it. If you look over here, when that dropped down at 930's candle, I'm entering right inside that. So as a reclaimed bullish fair value gap, relative equal lows, it just stabbed below that. And then when we're here, I'm going long while we're inside that. And the stop loss can be right below there. And this right here, this wick, you can break that down into the quadrants, and stop loss has to be at least below the low. And it comes down to about the lower quadrant, and then rips higher and goes to my target up here, as I mentioned when we were on the 1-minute chart. But over here on the 15-second chart, you can see that that range has fair value gap and volume imbalance. The market trades up, the bodies are staying inside that range, and then drops down, the bodies stay inside the lower quadrant, wicks down into the volume imbalance, but the bodies are staying inside of that buy sign imbalance, sell sign efficiency. And then it rips higher for this pool of liquidity right there. Remember I told you, start looking at the 15-second chart, find the relative equal highs and lows and what time they run to them. Okay, the price run begins inside the macro time to here. All this looks crazy now, doesn't it? It's a 15-second chart. And look how clean the price action is. It didn't look that clean so much on the 1-minute chart. But when you know the bias and you know the narrative, how it's going to employ the daily range at certain points and turns at time, everything becomes much, much clearer.